All right, it is now my pleasure to bring onto the stage from Body and Mind CEO Michael Mills. Let's get Michael a round of applause, please, everyone.
Hey, how are you?
Good. Michael,
good.
Welcome. There's your ticker.
Thank you very much. Hey, thanks everyone. It's just great to stand in front of a huge room of people here, and thanks for tuning in if you're watching virtually here. So I'll tell you a little bit about Body and Mind. And we'll get into this as soon as I get the flicker going here. Okay, obviously we're going to talk about some forward-looking statements here. If you'd like to read this in detail, please visit our website. Everything's on the website. So Body and Mind is in California, Nevada, Ohio, and Arkansas. We just announced a few weeks ago that we're coming into Michigan with a full vertical. And I'm going to go into each of the states in a little bit more detail here. Our vision is really simple. We identify low-cost ways to get into new markets. And in general, for us, that's been through winning licenses. We're looking for markets as they open up. We won our licenses in Nevada when it opened. We won our licenses in Ohio when it opened. We went in with a partner in Arkansas and won licenses when that state opened. So we keep a very close eye on the states that are opening up. We see more and more opening, and we feel that that's probably the best way to build shareholder value. When we get into operations, we know how to optimize them, and I'll go into a bit more detail on some of the things that we use to move our business forward. We look at M&A on a very regular basis. We've turned down a lot of deals because they just don't fit our metrics. Maybe they're in the wrong market, maybe they cost too much money, but we are always looking at ways to grow the business through acquisitions. And I think that one of the things that we've really demonstrated is that we can execute. The last time we took money was in May of 2019. Was our last capital raise. We laid out our work plan and we stuck to that work plan, and we're about to do the same thing again here. It all starts with quality, and we feel that we have a great, very approachable brand in Body and Mind. It's a lifestyle brand, but really when you peel this whole industry back, it comes down to quality. And this is just a short list of the awards that we've won over our years, growing cannabis, creating extracts, and creating edibles. So I'll go into each of the individual states that we're in right now and give you a bit of a sort of background on the company. We started in Nevada roughly 6 years ago. Anybody who was in the business at that point, Nevada was a very small market. It's not a small market anymore. But at that time, it was, one of the early states to go legal. We were able to obtain one of the first cultivation and production licenses in the state. It gave us this depth of experience and a team who understands this business. And I think anybody who's in this business knows this isn't easy. It's not easy to grow good cannabis. It's not easy to make extracts. It's part art, it's part science, and you really have to have a strong team to do that. We developed those skills over our 6 years. The people who started with us, almost all of them are still with us. And as we continue to grow, we've got this deep bench of talent that can move into our new markets. We've got a roughly 70 SKUs in the Nevada market. We're in almost all the dispensaries. We have a cultivation facility in Nevada and also a production facility in Nevada. As I mentioned earlier, we got into Ohio when the state opened for medical. We were probably one of the first dozen dispensaries to open in that state. It's been a fantastic state. When you look at the size of the market, there's 11.5 million people in Ohio. There's less than 60 dispensary licenses right now. I think that when you get into a market, and we saw this in Nevada, and we see it in Ohio, we see it really in all the markets. When you get in early and you're an early adopter, you're able to get your facility open, your dispensary open, before everyone else, you get this early mover advantage, not just with the customer base around you, but also with the regulators and also with all the other operators in the state. So when you're the first dispensary that's open, you start to develop a relationship with all the growers and all the extractors that maybe the person who opens the 50th dispensary doesn't have. So we've really been able to leverage that going forward. We just opened our production facility, or we just got our license to produce in Ohio. So when we won the dispensary license and the production license, we wanted to get the dispensary open and cash flow positive as fast as we can. Sort of put the production license on hold. We just got the license to operate that in the last month or so, and we're really looking forward to bringing our first Body and Mind branded product out into that market. What we like about having a dispensary and other parts of the vertical is when you've got a dispensary, it's like having a big lead order. You can start to feed your dispensary and move your product into your dispensary, and then build your sales channel out from there. In California, we moved into that market with an acquisition. We bought a medical dispensary in Long Beach, and that's been since upgraded to adult use. And we bought what you would call a paper license in San Diego, so an undeveloped license. We went through the development process on that and got it open just in time for COVID. So as opposed to having a huge party and a grand opening, we were buying cleaning supplies and masks and plexiglass. Regardless, we've seen a huge increase in sales. San Diego is a limited license jurisdiction. It's where we typically focus. And, I mentioned Ohio. We really, really like the limited license markets. We've also taken out a lease on a manufacturing facility. We're most of the way through the approval process to get that going. Looking to get construction started on that later on this year. In Arkansas, we came into that state when it opened up with our Partners Comprehensive Care Group. We'll have 66% of the economics of that operation. Again, we got that dispensary open just in time for COVID last year, roughly April last year, and it's been doing great. We're in a small town called West Memphis, which is literally the sort of the closest part of Arkansas to Memphis, Tennessee. Something that could be beneficial if that state ever flips to adult use. With the dispensary license comes a small cultivation license as well. We wanted to get the dispensary open, get it cash flowing, delayed getting the cultivation going, and we're probably about 3 weeks away from our first flower coming out of that cultivation. So we're excited to see that coming into the revenue stream as well. In Michigan, we just announced that we're going to come into that state with a full vertical. We have a dispensary license that's in construction right now. We're planning on building a 50,000 square foot cultivation, 20,000 in 2 phases, 20,000 square feet to start, 30,000 square feet on the next phase. Again, you're probably starting to hear this. We'd like to get part of the operation cash flowing and use that cash flow to develop the second part. And we'll have a production license with that as well. This just gives you a rough idea of where we are. Really over the last 5 quarters, we've grown our revenue very significantly. We're at about $1 million a quarter. Over a year ago, our last quarter was $7 million. It was about a 580% revenue increase over the prior year. You can start to see our gross profit ticking up. We had our last quarter was about $1.5 million in positive adjusted EBITDA and a loss of about $250,000. So as we bring these new facilities on, we start to see some really good impact to our revenue stream. And obviously, with some of the facilities that I mentioned in Michigan, with Ohio production coming on, with cultivation coming on in Arkansas, we expect to see some really nice growth. Balance sheet and financials, we're trading at about 40 cents right now. That's about 1.6 times our run rate, probably at the low end of the trading range. Our cash at the end of April, we have a July 31st fiscal year end was $1.3 million. On top of that, we took a debt instrument, which we got in July. That was a $1.1 million debt deal, of which we funded in 2 separate tranches. We took roughly $6 million. So we have a very strong use of proceeds for that. As I mentioned, we're going to develop Michigan and a number of other assets. Just to give you a rough idea, the leadership team, we've got a fantastic board of directors. Myself, I've been in business for roughly 25 years. I've been in everything from media. I worked for the Financial Post newspaper for roughly 10 years. I've been in tech. I've been in finance. Trip Hoffman, who's sitting right over here, is our Chief Operating Officer. Trip has a fantastic story about moving to Colorado years ago and deciding to get into the cannabis industry and not really having the experience, so he took a trimmer job for $10 an hour after being a fund manager and learned this business from the ground up. And he's probably forgotten more about cannabis than most people know. He's incredible at motivating our team, moving our team, building our team, and making sure that every one of our operations is as efficient as possible. And we really focus on operations because we feel that that's key to building a sustainable company. Dong Shim is our CFO. He's been a CFO for a number of publicly traded companies. Alexis Pedestra is the past Secretary of State for Business, Consumer Affairs, and Housing for California. Her agency was really involved in moving cannabis from medical cannabis to adult use in that state. And Brent Reuter is one of our directors. He's got a ton of capital market experience. He worked for Onyx and CIBC, and he's been a really valuable asset for our team. Just talk about execution and milestones. As I mentioned, our strategy is to go in and win licenses, and we have a great license application team. We feel that that's the best way to build shareholder value, is to win that license and develop it as fast as you can to cash flow positive, and then repeat. The acquisitions that we look at are we look at a lot of acquisitions, and we walk away from a lot of acquisitions. There's some opportunities that we see, both to go deep in the states that we're in and also to move into other states that make a lot of sense. They often take a lot longer to play out than anyone would like, but we've got some interesting opportunities in the pipeline. I think that one of the real strengths that we have is developing. And so when you get that license or you get that opportunity to create a revenue stream, whether it's a dispensary or a cultivation or a production facility, we've built them all out before. And there's a lot of headaches with this. Anybody in the business knows this. There's a lot of pieces of paper that you need to get before you can even think about moving forward on these developments. One of the things that we did in Michigan is we started that process probably a year and a half ago. And before we took on debt to develop those assets, we made sure that we were as far down the process as we could be before we really needed the large amount of money to start construction. So we're planning ahead, not only applying for licenses, but planning ahead as far as developing those licenses out. And I mentioned our efficiency. We do things like continual harvests, where we harvest every day of the week, and bring in systems so that we're turning crops and we're turning our inventory in our stores in a really, really efficient manner. So just some of the touch points on BAM. We have great growth, a number of licenses that we're in the process of developing. We're well capitalized with not only the debt that we've taken, but we have a second tranche that we can take later on this year. All the licenses that we have right now are fully funded to full development. So we really don't need to go and raise to execute on our strategy. We've been excellent stewards of capital. I think if you go back and take a look at what we said we would do, we've done everything we said we would do, and now we're loaded up with new licenses and can really repeat the process again. We have other license applications pending. As I mentioned, we focus on limited license jurisdictions, and I have to tell you how proud I am of our team for how we execute with a relatively small number of people. We've always been focused on costs. We don't have a huge overhead, a huge executive team. We get a lot done for the size of the company. I think we have a proven track record and strong management. And I'll leave some time for questions here. If anyone's got some questions, please step up.
What did you pay for your San Diego license?
Question was, what did you pay for your San Diego license?
It was a convoluted deal, and it was San Diego and Long Beach together. And I'd have to go back and double check because it was 2018, and I think it was in the 12 range for both of them. Yeah. And
second question, how much capital did you raise in total?
How much capital did you?
Total capital raised without the debt or equity only. We have raised, let me just think quickly. I think on the debt side, obviously 11 million, 6 of which we've taken. On the equity side, the last transaction was 10. I would put it probably in about the 27 million range. Bobby.
On another note completely, what's your take on the energy shortages that we're going to be experiencing? And I think it's going to demand that we rethink how the technology of energy.
What is your take on the energy shortages that we may be facing soon?
I think that's a great question, and we were actually just talking about it last night. We've been looking at various backup systems for all of our operations. So anybody knows, like, if you miss, if your energy goes out, if you're an indoor cultivator and your energy goes out, particularly in a warm climate where you have to have air conditioning, you can be in big trouble very, very quickly. So the first thing that we're looking at is backup systems. There's a few out there. And then the question is, do you want a full backup system that's going to power everything? Or do you want to be able to sort of hopefully limp it along for 6 hours and make sure that you're protecting that investment? And when I say investment, if you lose a crop in this business, it's a big deal. So we are thinking about that from a preservation, just self-preservation standpoint. And I think, look, we've been testing LED lights in Nevada in various rooms against strains, different lights. We want our data before we make a choice. I think eventually the entire business is going to go to LED. They're getting better. The spectrum's getting better. The way they're able to cast light is getting better. So I see that as probably being the biggest energy saver coming down the pipe.
What about water?
Yeah, it's, we're growing a crop. We're not growing almonds, thank goodness. But yeah, I think that anybody who's got a massive operation needs to be looking at water reclamation and processes that are going to save water.
Any other questions while we have Michael Mills here, Body and Mind? Questions for Michael?
Okay, well, thanks very much, everyone. Look, it's fantastic to be here, and I just want to thank Benzinga. This was a bit of a dice roll when they were planning it, and just great to have so many people come out and learn more about the cannabis industry. Really appreciate it.